Hey, what's going on? Scott Taylor with SanDiegoRealEstateHunter.com. In this video, I want to go over the 5 or so most asked questions that I've been getting in the last 30 to 45 to 60 days as I film this. We're heading into mid-August 2020. As always, if you're finding value from this video, I'd really appreciate if you'd smash that like button. If you're watching it on YouTube, of course, subscribe to get more videos like this and hit the notification button so you never miss a video. As always, look below this video. You're going to have some, we call them show notes, or some text of things that we talk about. Also some links to either some further articles or videos, and so you can get more information. And because I always like to back up everything that I talk about with stats. I've been doing it for 20 years in many different markets, many different countries, investing as an agent, doing loans, but I also always like to back things up with stats. Without further ado, let's go into the 5 or so most asked questions that I've been getting, because you might have this as well. Question number 1, of course, the big doozy from number 1. Where does the San Diego real estate and mortgage market stand right now in mid-August 2020? So as outlined recently in my San Diego real estate stats, look below the video, we are seeing record low inventories. I know this seems like a broken record, but it's something that I like to point out because they're facts. From a high of over 26,000 homes, townhomes, condos, multifamily, manufactured homes, land in San Diego in August of 2005, at the end of July 2020, we've had something around 4,500, 26,000 down to 4,500, right? So those mathematicians, what is that? 80%, over 80% less inventory from then until now, okay? As I've said, licensed to do real estate, licensed to do loans. So we have access to all the different loan programs that are available. We still have 103% financing for those that don't have a down payment. Anybody that was a veteran or current duty, we have 100% financing for VA loans. We have 100% financing for USDA loans. If you want to live in the countryside, think Fallbrook, Campo, Ramona, Julian, Mount Laguna, Borrego Springs, etc., etc. We have as low as 3% down if you want to go with a conventional loan, up to about a $510,000 loan amount, and as low as 5% down for a super conventional loan, up to about a $701,000 loan amount. We have 3.5% down for an FHA, down for a loan amount up to about $701,000, and 10 to 20% down for a jumbo loan if you're looking above that 701 loan amount. We have record low interest rates. As I outlined in my San Diego mortgage rate alert link below this video, we are seeing for all these no and low down types of programs, rates that start in the low to mid 2s for a 30-year fixed. That's crazy. Anybody that knows anything about inflation knows that that's essentially free money, right? That's lower than the cost of inflation. If you've been to the grocery store, things have obviously gone up more than 2%, right? Costs have gone up more than 2%. Has your rent, if you rent, gone up more than 2%? Yes, of course. So if you can get an interest rate less than 3%, in the mid 2s, in the low 2s, that is insane. It's free money. From, I believe it was August of 2006, we had interest rates something around 5.82% via a 30-year fixed. As of today, at the end of last month, 3.02%. And as I've said, they start in the low to mid 2s. So definitely mortgages are there. And then properties, I'm out looking with clients 2, 3, 4, 5 times a week, obviously, helping people buy, get mortgage loans, and sell in San Diego. You have access to the same MLS listings that I do. On my website, SanDiegoRealEstateHunter.com, it lists every active, pending, and sold property that's actually on the MLS in San Diego. I'm not like Trulia and Zillow, where I list fake things like pre-foreclosures that don't exist, pre-short sales that don't exist. We only list things that are active. And if you've been looking at this, you see the same information that I do on the MLS. Generally speaking, since we're in summer and a lot of other factors, things go within 2 weeks or less, or 2 weekends or less. Now, especially in the hot areas, we see things go in 1 weekend or a few days with many, many offers on it. Question number 2, I touch on a little bit, but are all the same mortgage loan types available today that were pre-COVID-19? So the short answer is yes. All the programs I just went over, I won't go over again. All those programs are available. Now, here's some caveats. When COVID-19 first came out, there were some disruptions, right? There was disruptions with, because things were shutting down, like the IRS department and us, like the availability, lenders, people working from home. So some things kind of slowed down. The lender loan times lasted longer to get approved, to get conditions, to close loans, right? There was disruptions, which are called non-QM loans. So a non-QM loan, things like down payment assistance, right? That's where you get assistance with your down payment, but we tack it on with a conventional or FHA loan, okay? All you're doing is you're getting assistance with your down payment. So there was disruptions with that. They dropped the loan amount. They changed credit scores needed. They changed some things. Personally, I was shocked that it was still available. I don't know why it didn't go away, but it's because they knew what they were doing. Interest rates dropped. Prices still went up. So for them, it was still a good investment to give out, let's just say 100, 101, 102, 103% financing. Jumbo loans. So when we talk about loans, Fannie, Freddie, FHA, right? Conventional FHA, USDA, VA, those loans are backed by taxpayers. That's why I've always said the United States is the world's largest socialized real estate market because most loans are backed by taxpayers. Okay, but when you deal with jumbo loans, each wholesale lender that I have up to 40 at any given time in the state of California. Each wholesale lender that I use, they have their own investors for their jumbo loans. Jumbo loans are not backed by U.S. taxpayers, at least not yet, aren't backed by U.S. taxpayers. So jumbo loans they changed how much money they wanted for down payment, which makes sense, right? There's turmoils in the mortgage markets. There's turmoils in the real estate market, in the stock market, in the world. So things change. So the down payment needed on jumbo loans changed. They wanted more down. Your credit score, they wanted a better credit score. They wanted more liquid assets. They want you to have more money. Shocker, right? So things like jumbo loans changed. Things like bank statement programs. So if you don't fit into this box with loans, we have things like bank statement programs or a lot of self-employed people. By the way, I'm self-employed, so I exactly know how it works. A lot of self-employed people, they legally show as little taxable income as possible. So one thing that we can do, not down payment assistance, but one thing that we can do if you could put down money is go with a bank statement program. Programs like that went away. A lot of those lenders that specialized in those types of loans closed shop. Some of them have come back. Some of those programs have come back. So long story short, yes, all the loan programs right now are back like they were pre-COVID-19, and they have been back for the last several weeks, several months, etc. But one thing I'd like to point out, anytime there's disruptions, I don't see much difference with the FHA or the VA or a USDA or a conventional loan, maybe super conforming or super conventional, it's a little bit different. But yes, down payment assistance, jumbo, and anything outside the box. If and when anything happens again, which I'm sure it will here shortly, those loans might go away entirely, or they might change what we need to get them. Question number 3. So how do you see the elections playing into the, real estate markets, and especially, obviously, the San Diego real estate markets? And by the way, this has nothing to do with if it's pro-Trump, against Trump, pro-Biden, against Biden, whoever else might be thrown into the ring. That's a different conversation for a different day, and I don't play any kind of politics. I only look at things as far as real estate and mortgages. Why? So we know I'm filming this in mid-August, we have the elections, I believe, are Tuesday, November 3rd. But we know that we're going to have more mail-in ballots already, right? We already know because of lockdowns, we're going to be having more mail-in ballots, right? We already know for a fact that whoever wins or supposedly wins is going to be contested in the courts, right? Think of the year 2000. Remember Bush Gore. So elections won't be decided, right? It won't be smooth sailing and everybody votes, or people that vote November 3rd and it's decided that night. This year, it's not going to happen. They've already told us it's not going to happen. So to think it will is naive. So in mid-August, we're going to have the rest of August, September, October, November, December. I predict at least the next 4.5 months will be this kind of turmoil from election, not from what I believe, but from what they've told us that they're going to do. So yes, because of this, I expect even lower inventory than ever. Fewer people will be selling from here through the end of the year. So we're going to be seeing, they've already said mortgage rates will stay about the same, if not trend lower, right? We already know that we have access to all the major loan programs. We already know that we have things like down payment assistance. So the only thing that I see happening here for question number 3 with the elections is with the elections and things up in the air, things will only get tighter and prices will either stay the same or continue to go up based off of that. Question number 4, how do you see unemployment playing into everything? Okay, so we already know we are experiencing the largest unemployment rates in U.S. history, in California history, in San Diego's history. Okay, when you factor in because of shutdowns and COVID-19, and when you factor in, all the people, right, that were self-employed, even just like there's over 2 million Uber and Lyft drivers, right? When you start thinking of all the people from the gig economy, are you a self-employed writer? Are you a self-employed electrician? Are you a handy person? Right? All those types of self-employed people, obviously everybody in real estate, everybody in the escrow. So like when you start looking at that, the real numbers dwarf anything that we saw in 2007, 8, 9, 10, 11, 12, and they dwarf anything from the Great Depression from 1929 to 1933, right? So that is a given. Off the top, we think, well, obviously there has to be foreclosures and there has to be evictions. But what have they done? Because of this, and now because we're in a fiat currency, right? After 1971, the world, Bretton Woods, the world went off the gold standard. All money can be printed at will. And in actuality, the dollar is backed by Saudi Arabian oil, right? It's an oil currency, but that's a different conversation for a different day. But it's fiat. They can print it at will. That's why the dollar is devalued 99% since the Federal Reserve was enacted unconstitutionally in 1913. But what they've done is, for the first time that I know in 20 years, and maybe ever, they said, hey, you have a student loan? You don't have to pay it. You have a credit card payment? You don't have to pay it. You have a personal loan. You have a car loan. Guess what? You don't have to pay it. So you might not have a job, but you don't have to pay these things. That hasn't happened before, right? Then, of course, you have things like, hey, are you a tenant? Are you renting? Great news. You can't be evicted. Now, you're still going to owe that rent, maybe, right? Unless there's some kind of something going on as far as rent. You're still going to owe it, just not today, so we can't evict you. And guess what? You have a mortgage. You don't have a job and you don't have a mortgage. Great news. What we're going to do is you don't have to make payments. The money will still go on your principal, and all we're going to do is put it onto your end of the loan. Those are things that we've never seen before. So, and by the way, as I'm filming this past weekend, via executive order, if it still stands, we'll see, Donald Trump, signed. He signed into things like, hey, guess what? You're unemployed, you still get unemployment, plus you get an extra $400 a week. Plus, we're going to extend you not being able to be evicted if you're not paying rent. Plus, if you're not making your mortgage payment, you can't be foreclosed on. Plus, if you have a student loan, you get the idea, you don't have to make it through the end of the year. Guess what? It's kicking the can down the road. But if they continually do that or bring up new things, nothing's going to change and it's only going to get tighter. Question number 5, and this is a very important one, probably the one that I get the most based off of all these. Hey, Scott, if you were me, what would you do? Would you buy now or wait? So obviously this is a very personal decision, and much more goes into it than just, a few questions and answers or a short video. But let me break some things down as simple as I can. I'm a big believer you use the information that you have today to make a decision. It's the old saying, a bird in the hand is worth 2 in the bush. You right, the Hamburglar, do you want a hamburger today or maybe 2 tomorrow? The problem with maybe 2 tomorrow is maybe 2 tomorrow never comes. And you have the information today. So if you need to take advantage of things like the down payment assistance, right, that could go away at any time, you buy now and you take that money and you get the very low interest rates and you buy. If you need to do something like a VA loan or USDA loan, which is 0 down, same recommendation. You take that with the low interest rates and you get in now. Okay. If you're looking to do 3% down conventional or 3.5% down FHA, you get in now. I get it. And I'll get to more in a second. But it's like, hey, Scott, you're telling everybody to buy. You're in real estate. You only make money if you do a transaction. You're in mortgages. You only make money if you do a transaction. Here's where I'm coming from. If you have very little money now, and the only way that you can buy is if there's programs available for very little money, you take advantage of those programs, especially when we have a record low interest rates. Why? Because what are you going to do if they get rid of those programs and you can't buy? Then you are out of luck. Okay. What are you going to do if you think that you're smarter than other people and you want to wait until there's a crash, whatever that means? Let me ask you a question. If there's a crash, do you think that there's going to be down payment assistance? Do you think that there's going to be low down loans? Of course not. The biggest issue past 2007, 8, 9, 10, 11, 12 is that there was not access to financing because the market changed and lenders didn't want to loan money to people with bad credit and with no money. Makes sense, right? You know, tailing on that, it's always funny. People that are renting want to tell me, well, you know, I'm playing the market, I'm seeing how things are going, and I'm like, meanwhile, you're paying rent, the $2,000, $3,000, $4,000 that you pay every month for the last several years. Some people have been coming to me for years. 4 years is the longest that I've seen. They spent thousands of hours on my site, and who knows any other sites, right? $3,000 a month for 1 year is $36,000. You could be using that towards your home, paying down the principal, getting appreciation, getting tax write-offs, having peace of mind that you can't be evicted, locking into low interest rates. I mean, to me, it's a no-brainer. So people think that they're going to wait to make a decision. You are making a decision by renting. If you're living in larger cities, right, outside of San Diego, LA, San Francisco, Fresno, San Jose, Portland with all the unrest, Seattle with all the unrest, I can't remember if I said Phoenix, Las Vegas, or any other place outside, right? A lot of people are believing with social unrest, they want to go to areas that have better weather, better climate, and lower social unrest. So I'm getting a lot more calls from those people, especially in areas either coastal or more in the mountains, or Julian, Ramona, Campo, etc. Excuse me. But, right, lest you think I'm just a buy guy. But if you're living in San Diego right now and you are a homeowner, and maybe you are either unemployed and collecting unemployment, or self-employed and collecting nothing, or your income has gone down, okay? And you could take advantage of not making a mortgage payment because they're going to tack it on. I would say stay, right? If you can't qualify, if you sell and you can't qualify for a new loan anyways, I would say stay. Take advantage of the opportunities that you have right now. Now, if you want to sell to maybe take your money and go someplace else that's, you know, quieter, maybe if you believe there's social unrest, a lot more people are moving to obviously Idaho or Utah, Montana. So if that's your idea, hey, I built up some money, I want to sell, I'm going to pay cash someplace else, or I'm going to pay rent someplace else to wait it out. Sure, that would make sense. But if you're a homeowner and your income's drastically down, you're not seeing the inventory in San Diego, you can't get approved for a new loan anyways, my suggestion to you would be to stay. All right, cool. That's it. The 5 most common questions and answers that I've been seeing over the last 30 to 45 to 60 days. Of course, if you have any questions for me, or if you need any assistance to get a mortgage loan in San Diego, to refinance your current loan anywhere in the state of California, or obviously to buy in San Diego, I would love to help you out. All my contact details are listed below. And of course, I look forward to chatting with you and helping you sometime soon.